Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Anushi Vakaria. We'll take you through the next 1 hour of trade. Let's very quickly take you through how the markets are faring this morning, and it's a bit of a wobbly start, and this is reflective of what you're seeing across the board in the global markets as well, as you see quite a bit of chop and churn on the equity benchmark here, the Nifty 50, of course, shuttling between gains and losses, giving up those early gains to trade currently in the red by about 0.2% or thereabouts. The broader markets have languished a little bit in trade today and continue to do so at the low point of the day. Right now, you have the mid-cap index and the small-cap index down about 0.9% each. The market breadth tilted very firmly at this juncture, I would think, in favor of the declines. And if anything, that is only widened over the course of the day. Let's pull that up. There you go. It's very clear. You can talk about it as the widening mouth of a crocodile, if at all, and that seems to be the case, and maybe that will continue for the rest of the session. One thing stands out, and let's look at the contributors on the Nifty 50 just to give you a sense of how things are going, because there are few stocks, a handful of stocks that I saw, the likes of HDFC Life, a couple of the metal names that lost quite a bit of ground from the high point today, losing over 2% each. ITC I'll come to in just a bit. Of course, it's gone ex demerger today, so ex the hotel business today. And let's pull up the chart just to give you a sense of what exactly is happening. The price that was settled at was 455. So at this juncture, it is actually trading lower than the price that was settled. Don't, of course, look at that ticker at the bottom to say 6% because 26 odd is what the price reduction on account of the ex demerger is what took place and the price that was settled at, and from that point also it's trading a little lower. Short while back it was trading above that price. Let's see where it settles. But there are a few more stocks that stand out, and I'm going to ask you to restrict it to only a couple, even though we have so many to talk about.
So many business updates in focus today, but we'll just focus on a handful of these names. Before I go to the business updates, I just want to quickly address ITI Limited, an interesting one, seeing about 11 to 12% of gains in trade today. In fact, over the last 6 months, if we see, it's about 67% of gain in trade. So strong mover in terms of where this is. No fundamental views as of now, but it's been in focus on back of couple of order wins. Other than that, also we have Nykaa, stocks like Nykaa and Jubilant Foodworks in focus. Nykaa up over 5%. This is after it reported a revenue growth higher than the mid-20 numbers as well. And Jubilant, we saw about 50% plus growth in terms of where the top line is concerned. So interesting as far as that goes. Another quick one, Macrotech Developers saw about a 32% growth in its pre-sales numbers. It is one of the top performing ones in the Nifty Realty Index also. So this is as far as where the top stocks are in trade today. So a couple of interesting names that we're looking at, Alex.
No doubt. All right. So, and quite a few names in the banking space also standing out. Not least of which HDFC Bank we were focusing on at the start, but quite a few of the public sector banks languishing in trade today, something like a Union Bank or Bank of Baroda, all doing a little bit or looking a little worse for the wear at this juncture. Bank of Baroda, of course, losing about 3.7% as we speak. Saurabh Jain, Equity Head Research at SMC Global Securities, and Nilesh Jain, Head AVP Technical and Derivatives Research at Centrum Broking, joining us. Thanks so much, gentlemen, for taking the time. And Saurabh, I think I've spoken to you after the start of the new year. I'm going to wish both of you anyway, Happy New Year. Nilesh, it's the first time I'm speaking to you in the new year, so thanks so much for taking the time. I believe we've got our first caller for the day. We've got Shankar from Chennai who's called us. Good morning, Shankar, and Happy New Year to you. How can we help you today?
Good morning, sir. Very Happy New Year.
Thank you so much. Please go ahead.
Sir, I bought 600 shares of Moschip semiconductor.
Okay.
At the rate of 27 rupees.
Okay.
Last 15 years back.
15 years back.
Yes, 2007 or 8.
Wow. Okay. And you
I am
bought
ready
it
to hold for another 10 years.
Okay. All right. But
what is the outlook and target for that share?
I got your question. Can you help me, Shankar, as to what you thought when you bought the price of when you bought the share at a price of 27? You must have studied the company at that time, and you've clearly had quite a lot of confidence in the company, considering that you've held for the better part of 15 years.
Yes.
What did you see in the company
At
at
the
that point?
same time, I want to share one more. Past 1 year or 2 years, it will rise.
So, okay.
It's also one of the reasons I am told.
Okay, understood. All right. I kind of got your question. Thanks so much, Shankar, for asking. I will go to Saurabh on this one. Saurabh, Moschip, and a lot of people trying to bet on the semiconductor story. Of course, when it comes to India's fabricators, we're still pretty low on the value chain, right? It's going to take quite a while for us to build up to the capability of what is displayed in, say, Taiwan. But the move has been made. Would you stay invested in Moschip?
I think it is a very small company, Alex. I think the market cap is now 4,200 crore. But if you look at the valuation, I think it is trading 15 times to book value with negligible profits. I think a few months back, the company has won some order. So in that sense, I think the company is doing pretty good job, but it is yet to convert into revenue and profitability. To my mind, the stock is priced to perfection, but he's holding for last 15 years, as he said. I think if he can hold for next 5-10 years, then it can be it makes sense to hold.
Okay, so a hold for Moschip Semi is what we are looking at. The next question is for the capital goods sector. Now, the next question that we are looking at is pertaining to what can be for Thermax. This is from Kailash Nath from Trivandrum. He has about 50 shares of Thermax and wants to understand the 1 to 2 year perspective on this one. Saurabh, I'll come back to you on Thermax. In the last 6 months, we've seen the stock underperforming the market. A lot of emphasis now on Q3 and Q4 in terms of how the capex is going to be from the government side. What is your outlook on something like Thermax for the longer term play?
I think lack of capex is the only thing which has resulted into some kind of underperformance by the capital goods sector. But I think now with the election gone by, the private and government capex will come to the fore. And normally second half of the year is actually good for all the industries. In that sense, I think the things will surely pick up. With regards to Thermax, it's very old and good company. I think numbers will surely improve in Q3 and going in Q4. So in my opinion, it is a hold.
Thermax, all right. And it's had a little bit of a torrid time over the last month, but nonetheless, on the long-term fundamentals, it looks strong according to Saurabh. Tejas Network is the name of the counter we're talking about next. And this is a question from Ekambaraya, who's writing in from Hyderabad. He's bought at an average price of 1,278 and he's got 100 shares. He's incurring a bit of a loss, Nilesh, and he's wondering whether he can buy at the current price. The stock is currently trading at 1,168 or thereabouts. Would you buy right now?
Well, Agam, the overall structure, sorry, Alex, so the overall structure is not looking that promising. Today, it has broken down below its 200-day moving average. And in the previous month, it has been one of the underperformers as well. So overall, the structure is indicating that there will be another leg on the lower side towards 1140 or maybe 1120 might be tested. So better to, avoid taking any contrabet as of now and let the counter stabilize. I think somewhere around 1050 it may find some amount of support, so better wait for some confirmation of a trend reversal. As of now, the trend looks weak.
Interestingly, okay, so that's the view. The trend looks weak on Tejas, just to round up that question, and hopefully that answers your question. But we've got a few people asking about ITC, so let's address that. And this is a question coming in from Gul. He's writing in from Kerala, and he's asking, is it okay to buy ITC shares today, or will the share price drop further? Saurabh, we've seen the special pre-open session to identify the price X hotels business for ITC today. It settled 26 rupees lower and it has dropped from that price. So indeed, Gul's question is a pertinent one right now, because people were talking about the fact that ITC will have a holdco discount, at least when it comes to that hotels business. But then, of course, it has its primary business in the form of its cigarettes business. So is there a possibility of further downside from here? And what would you do? Would you be a buy in ITC?
I think you cannot ignore the short-term selling when such events unfold. Normally, what happens, you may see some more selling coming in. Normally, what was earlier perceived like there will be a cut of approximately 15 to 20 rupees, because that business was valued for 150 to 200, anywhere in the range, but the stock got opened 26 rupees down. I think it's short-term selling in what comes to my mind. I think one can buy ITC. But one thing is for sure, I think if one can, wait till budget, because there is some news that maybe government is inclined to inch up the excise duty on cigarette. If that happens to be the case, then we may see more selling. Otherwise, the business is good. In my opinion, one should wait till budget before getting into ITC.
Okay. I believe we've got the next caller. We've got Jayesh calling us from Pune. Good morning, Jayesh. And you've got a stock that you've bought, Zenith Steel. Can you tell me about this company? I'm pulling it up as we speak.
Yeah, hi sir. Good morning.
Good morning.
Actually, I want to know about this stock. I have the quantity of 1960 at 9 rupees 14 paise. I have bought it.
Yeah.
Actually, I want to know, is it a long-term investment or it's a swing trade kind of thing?
Okay, can you help me as to where you came to know about this company and why you invested in it? I'm pulling up the company as we speak, and I'm just trying to figure out what it does, because it is a penny stock at the end of the day. So what do you to it?
Actually, I came across one screener, so that's the reason I thought I just checked the fundamentals, but it was very weak. So
It was weak.
For a swing trade, I would like to prefer your advice, sir.
Understood. So, okay. So therefore, is it right to assume that your hope with this is that it will turn a profit in a short period of time, Jayesh, and that's why you bought it?
Yes, sir.
Okay. So you plan to hold for less than a year, right?
Yes, sir. Yes.
Okay. Nilesh, what would you say about this company? I must confess, I'm not very familiar with it. Is this strategy appropriate? And thankfully, the stock is not deteriorated too much from the buy price. So if he needs to exit, he can do so without too much of a dent.
Well, Alex, as you mentioned, there are no fundamentals, and I would say there are no technicals as well. The stock has been trading on upper and lower circuits in the past, and I don't see any swing trade kind of a situation in this particular counter. There are better options available in quality names. Within Nifty 500, you will find a good stocks. But as of now, Zenith Steel, it's an avoid. And if you see any, pullback towards 9.10, 9.15 near your buy price, I think that's a good exit point. Better to focus on quality names and do not chase such penny stocks. Not advisable at all.
Okay, so definitely a sell call coming in for this penny stock that we are looking at, which is Zenith Steel Tubes. Next question is from Natasha from Goa. She holds about 58 shares of Northern Arc Capital, and this is at a price of 341. Now, if we pull up the stock performance of this, since the listing in September 24, we've seen about a downtick of 27% in this stock price. So currently the viewer is sitting at a loss of around 6,700. Saurabh, I want to come to you on this one. What is your view on something like Northern Arc Capital, if you can give us more perspective on this, whether she should continue to hold or sell in this?
Won't be able to comment on this.
Okay. Then can you comment about the MSME lending space, where there seems to have been a little bit of trouble, and Northern Arc is primarily in that space. It is also diversified into the commercial lending space. So all of those areas, there were a few question marks about delinquency. So from that perspective, is there something that you can tell her that will give her a little bit of advice, even if you can't give her specific comments on Northern Arc?
Generally speaking, MSME segment is facing pressure in terms of rise in delinquency. There is a steep rise in the delinquency in the NPAs, and the profitability has also gone down. And these companies are now facing real pressure to grow their business because the recovery rates are also going down. So generally speaking, all the MSME companies, if you look at in the last few months, have been underperformer. So if that in this context only, Northern Arc Capital is also coming down, cooling off 20-30%. I think it is better to get away if you see any kind of bounce.
Well, Natasha, I hope that answers your query on the overall industry perspective. But next we have a caller joining us, Jay Shanti from Chennai. Hi Shanti, how can we help you?
Namaste.
Yeah, you're audible. Can you talk to us about your query?
Okay. No, I think we're having a little bit of an issue with Mr. Shanti's line. Hopefully, we can get him back in just a bit. I believe the question was on AppTech. But let's move to the next one. Yash has got a question.
Yeah, absolutely. So the next question is from Yash. He's writing from Gurgaon. He's holding two mine company shares since last 3 years. One is Alkyl. This is at 85 shares at a price of 2,975. And Balaji Mines, 37 shares at price of 3,147. Requesting a fundamental view on both these shares. When will the sector revive and some meaningful returns if that could be expected? Saurabh, coming to you on this, an industry perspective is what he's looking for, and his fundamental take on two of these companies, which is Alkyl Mines and Bajaj Mines. If you can share a perspective on that.
I think these chemical businesses are really some tricky business, and there is a lot of volatility in terms of seasonality. So in the last few quarters, we have seen that the profitability and the pricing of the chemicals in which these companies deals is cooling off, and the demand is also was also a worry factor. Now, I think there is an expectation that the cycle will surely bottom out and things will improve in terms of operational performance. So in that context, I think one should wait because the valuations have already subsided. Now these companies are trading close to 6-7 times or to book value. And from the peak, they have the correction. The correction is quite huge. So, in my opinion, I think one should wait for the December quarterly earnings and the management guidance for the ensuing quarters, and then take a call.
Okay. Just wait for some more updates is the view from Saurabh on the fundamentals. I believe we've got a caller. Sanjay is calling us from Karnataka. Sanjay, good morning and thanks so much for calling us. What would you want to know about today?
Hi sir, good morning sir. I'm from Mandya, Karnataka. Namaskara sir.
Namaskara. How can we help you today?
Sir, Waaree Renewables Technology, under stock.
Okay.
Average price of 1290.
Okay.
Stellar holder, sir.
Okay, and what is the time period that you have, Sanjay? You want to hold
6 months.
6 months.
Sir, 6
okay.
months.
6 months. So you're in the profit right now, and you bought at levels of 1290. Stock price is currently at 1,333. Do you want to buy more, or do you want to hold only this much?
Sir?
You want to buy more, or you want to hold only this much?
Sir, 6 month old period, sir.
Got it. Okay. All right. Nilesh, I'll come to you on the technicals. 100 shares bought at 1290. Would you hold or sell at this point?
Well, at this point, it looks like more sort of a consolidation with slightly negative bias. So I would rather wait for a pullback towards 3,200 to 3,400. That can be a good exit point. But as of now, it's a hold, and one can keep a stop loss below 2,600 because that's the immediate support for this particular counter. I don't have much of data because it was a recent listing, and whatever data I have, I think the stock is likely
we're
to...
talking about Waaree Renewables, right? Waaree Renewables, 1,333 is the current market price? Yeah,
sorry.
so the buy price is
engineering.
Yeah. So the buy price is 1290. The current market price is 1,333. He's in the green. He's asking, should he hold for another 6 months?
Right. So Waaree Renewable, I think, yes, I've got the chart as well. So stock is in a downtrend since a long time after hitting highs near about 3,000 in the month of May 24. The stock has been in a continuous declining trend, making a low top and low bottom formation. The overall trend is still looking weak, and we may see further downtick towards 1,200 to 1,150 as well. So better whatever pullback you get, try to exit from the long position. I don't see any immediate trend reversal on this particular counter. If somebody wants to hold it for a little positional perspective, then one can keep a stop loss below 1,250. That's the immediate support for this particular counter. And I would, I would take an exit call if at all it reaches 1,600 to 1,650.
Okay, so a sell call is what we are looking for Waaree Renewable Technologies. But now the next question is from Abhishek from Mumbai. He wants to understand the view for Zomato. Now it's been in correction mode since this last 1 month or so. In fact, we are looking at about 10% of a downtick he holds. If you look at his portfolio, he holds about 5,000 rupees profit in this one. Wants to understand whether it's a right time to book profits. Nilesh, I'll come back to you on this one. What is your view on Zomato? Do you think the recent correction is a good entry price, or he should rather book profits now?
Absolutely, Anshri. So, recent correction, I think it's a good opportunity to accumulate this particular counter because the stock has given a good run up near about 305 to 307. And since after that, we are witnessing some profit taking. Although there could be possibility of a further profit taking to continue towards 260 level. But ideally, one should buy in the range of 250 to 265. That could be a good entry point. One can keep a stop loss below 240 because 240 is a double bottom support for this particular counter. So as long as it holds above 240, the overall structure is kind of a buy on decline, and the position target for particular counter comes around 300 to 350.
Okay, 300 and 350 is something, the levels that we should be watching out for Zomato. Now next we have a caller joining us. This is A.N. Sharma from Hyderabad. Hi Mr. Sharma, I hope I'm audible to you. Can you please state your query?
Yes, I'm A.N. Sharma here. I'm calling from Hyderabad. I'm holding 10,000 shares of Corp Limited. So I'm holding it at 360 rupees. Recently, on the 1st of January, there was disclosure of selling of land stake in Navi Mumbai, which the company was holding 2,200 crores, and there was no further update. So I just want to know whether I should hold or add, or what do I do with Corp stock?
Yeah, that's a pertinent question, Mr. Sharma, and indeed, a lot of investors are asking this question at this juncture, and I see that you are making substantial losses. What was the intention? And when did you buy this stock? You bought this stock when everyone was talking about the prospects of the SEZ, right?
Yes, last year I bought it when the Atal Setu was been inaugurated by the Prime Minister Narendra Modi for Navi Mumbai SEZ.
Yes.
So based on that information and the news and the Navi Mumbai airport coming up, so I bought this stock at 360 rupees last year.
Okay.
In 2023 December, in fact, I could say.
Got it. Just a clarification, Mr. Sharma, so that my expert can give you the best possible advice. Is this part of a larger portfolio of stocks? Is this perhaps less than 10% of the value of your portfolio?
No, it's a larger part of my portfolio. I kept on adding this as there was a information which was being floating from the government about the Navi Mumbai SEZ, which was to be, and the airport to be inaugurated shortly.
Okay.
So based on all, I kept on adding it, looking at the prospect of the particular stock and the appreciation which I could get. And I kept on adding it. So hence my average is about 360 rupees for 10,000 shares which I'm holding.
Understood. And you are incurring quite a bit of a loss. Let me try and get you the best possible advice. Saurabh, a loss of as much as 15 lakhs at this juncture in this one particular stock. And you heard based on the prospects that he thought would emerge eventually, he has continued to add. But we know what the latest is. There was a deal that was struck. Reliance Industries set to buy 74% stake from that consortium at about 1,600 odd crore rupees, valuing the entire land, 5,200 acres, at about 2,200 crore. There are some that have questioned this already. And since that point, the stock price has been taking a battering. Would you sell at this point, or would you hold with the hope that there will be a recovery?
See, I think the market perception was that the land will be pricing close to 5,000 odd crore rupees. And after this, when the SEZ will be built and the airport operations will be done, these companies will be able to make a good amount of money by doing infrastructure activity on this piece of land. And now with this news coming in, the pricing of the land is actually halved, and that is the reason why the shareholders are selling this company. And now one thing is a possibility that some money is getting into the Corp also, which may it is only a expectation that maybe Corp will come out with some kind of a special dividend, which will enthusiast some of the investors and may cheer up the stock price. So in that sense, I think one should wait for a while, because the damage has already been done. I think maximum damage has already been done. So in my opinion, I think wait for some time, look for some kind of more news coming from the management.
Okay, so wait and watch is the approach for Jai Corporation over here. Next query is from Neena from Kerala. She is holding about 200 shares of Kolte Patil Developers, and this is at a rate of 350, currently sitting on a loss of 460. Now, she understands that the quarterly results last time were negative, so whether she should switch to some other stock or wait for a rebound on this stock. Her time frame for the same is for 1 year. Saurav, I'll come to you on this one. Kolte Patil developers, if we look at the Q3, before this quarter also, the launches are expected to be on the weaker side, but Q4 we expect a strong bounce back. What's your view on something like this?
I think whenever the quarterly updates comes, people usually look into what kind of sales activity is happening and what are the new launches. In that sense, I think Kolte Patil failed to cheer up the investor, and that is why the selling is coming up. So, in my opinion, I think wait for one more quarter. Usually, things go up in the quarter 3 and quarter 4, and then take a call.
Just want to point out on the point of the acquisition of Corp. Of course, the advice was to hold based on the fundamentals, but remember that you should not have too much of a concentration in any one stock. This is standard practice. Even fund managers have a restriction of about 10%. This is, of course, regulatorily enforced and I'm talking about mutual fund schemes. But there's a reason for that. Of course, the prospects for outsized returns in any one stock is tremendous, but also the prospects for tremendous losses. And you could see a large amount of wealth erosion in a very quick period of time, as has been the case. Look at that, 45% over the course of just about a week and a half to 2 weeks or thereabouts. And it's quite sudden and quite sharp. Very little that you can do in that scenario. It's time for a very quick break. We've got more on the other side, so do stay tuned.
On my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? Yeah. But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Ask Profit on NDTV Profit. This show gets you answers to all of your stock-related questions, and to that end, you can send them to us on the WhatsApp number that you see on your screen, or in fact on a call. You can call us on the landline that you will shortly see on your screen, and we will try and take as many questions as we can over the course of the next half an hour. Now, the first question we're taking on this side is from Sudha, who's writing to us from Hyderabad. She's bought 22 shares of HCL Tech at prices of 1,511.6. Let's pull up the chart and see where it's currently trading. She is in the green, and very much so. In fact, 29% gains at this juncture at the very least. Stock is currently trading just about 1,950. And of course, IT is in focus all of this week on account of the start of the earnings season. She's asking, should she book profits or accumulate more? She's in for the long term. Nilesh, I'll come to you on the charts. What should she do?
Tech within IT Pack has been one of the outperformer, and we have seen a new record high on Friday. So major undertone still looks strong. I think one should ride this particular momentum. One can keep a trailing stop loss in order to protect the gain that she's already holding. So ideally the trailing stop loss should be placed at 1920, and on the upside 2000, 2040 can be seen from a short-term point of view. So better to stay put with a strict trailing stop loss.
Got it. All right. Thanks so much, Nilesh. And indeed, thanks so much for joining us today. I understand that you have to leave us a little early today. Next time, I hope that we can speak for a full hour. But pleasure as always having you. We've got Ajit Mishra, SVP Research at Religare Broking, joining us. Ajit, as always, thanks so much for taking the time. I will come to you for the first question on this side of the half, actually the second one, which is Ganesha Ecosphere. And this is a question from Shweta. She's writing in from Hyderabad, and she's bought at levels of 2,056. She's wondering whether to hold or exit with a 6-month time horizon. What would you say?
So can you please help me with the symbol, Alex, because I'm not tracking this stock.
Yeah, so I'm going to try and pull that up. It's Ganesha Ecosphere, which is currently trading at 1865. If we can pull up the symbol, I'm trying to pull that up as well. It's GANECOS.
All right. Yeah. So it's quoting at 1865 now, and so long-term trend is still positive. It's just that we are seeing correction after the phenomenal surge from 900 to 2400 mark, and the recent correction is largely, with not much of the volume. So it's okay, but the challenging part is that since we are inching towards the long-term averages around 1750 mark, so that is going to be critical. In case if it fails to hold, then this correction may deepen further. So as of now, one can continue to stay put with 1750 as a stop loss, and in case of recovery, 2025 to 2100 mark, that will be the area of first resistance.
Okay, so hold is what we are looking for, Ganesha Ecosphere. Now, next question is from Raj Gopalan from Chennai. Wants to understand the long-term prospects of BASF Limited. Whether is it good to buy for a long term for say more than 2 to 3 years now. Saurabh, I'll come to you on this one. In the last 6 months or so, we have seen a kind of correction in this stock, about 4-5%. Before that, it's had a stellar year. What is your view on something like this stock?
I think it is one of the great company in the chemical space. With the promoter is, it is the driven by the promoter is international, so it's an MNC driven company. So in my opinion, I think the chemical space is now looking good, and the recent correction provides a good opportunity. So it can be a good hold.
A hold is what we are looking for BASF Limited. Now, next we have a caller joining us. It's Kushal from Bengaluru. Hi Kushal, how can we help you on the show today?
Yeah, ma'am. Very good morning. Actually, I'm looking for accumulation of Ceigall India. So it's like an infrastructure company. So I can see they have a very good order book. So around 12,000 crore. So my perspective is can I accumulate the shares right now? And I'm looking for a long-term view on the revenue growth and profitability, everything.
So Kushal, is it on the basis of order book and the fundamental outlook? Can you share more on why do you wish to accumulate this? Do you have an existing position already?
Yeah, because actually it is an infrastructure company.
Right.
So as of now, we can see the Modi government is very keen on developing the infrastructure in the period of 5 to 10 years. So even I had read that the Union Ministry has allocated around 1,20,000 crores for the upcoming bidding. So from this I can see there is a very good opportunity in this, especially in the Ceigall India. So my main motive is for a long-term view.
Okay, got it. Saurabh, I'll take this one with you. Ceigall is something, this is a recent listing on the street that we are seeing at. In fact, we have some of the brokerages also which are bullish on this stock. Just IFL came out with a note today. They are seeing about 20% of an upside. Even if you talk about the order book, it has a strong order book positioning. And as Kushal was saying, a lot of now attention falls on the capex cycle and the government play over here. What is your view on something like a Ceigall India?
See, while the space is looking quite interesting, normally second half we see things getting speed up and order booking also takes a leap. So the space is quite interesting. But since it's a new listing, only we have seen only 1 or 2 quarter history, and I believe the listed ones provide also provide good opportunity. The companies like HG Infra, KNR Construction, or maybe GR Infra. I think these companies are more stable with the history backing the business performance. So in my opinion, he can look at these companies also.
I do want to pull up the Nifty 50 chart. We are currently trading at cuts of about 0.8% for the Nifty 50. We've seen a considerable breakdown over the last 15 to 20 minutes or so, and we're trading at very close to the low point of the day, which today is 23,806. It is at 23,815 as we speak. I just want to come to you very quickly, Ajit, on what you're seeing that is causing this kind of pressure on the downside, and what are the key levels now that we're very close to that 23,800 mark?
Yeah, that's true, Alex. In fact, almost on the verge of negating the surge that we had on Thursday, which somehow gave some hopes to the bulls that there could be further recovery. The underperformance of banking is basically have started hurting because banking index today we have slipped below the long-term averages. And last week, Alex, the top 2 performer ICICI and SDFC, they were among the top 5 losers in the Nifty 50 basket on the weekly basis. So this is something which is hurting the market sentiments because financials and banking put together have 40% of the weight. And now 23,700, the long-term moving average. So currently the bulls are trying to hold this area somehow on the intraday basis. Yes, we have slipped below this mark for a couple of occasions, but somehow we are trying to hold this level. So a decisive close below 23,700 would again push the bulls on the back foot, and the November month low 23,250 is something that market may test.
Yeah, we were looking at some of the data over the last several years, and you can never tell which way January is going to go. There have been months in the past several years where there have been absolute frenetic returns, and there have been months where there have been significant drops. So there's no real trend that you can see. And at this juncture, it's hard to tell where we're heading right now. Let's take the next question. We've got Jitendra, who's got a question on Sona BLW, and this is in the automotive ancillary space. He wants to invest 2 lakh rupees in this company for a period of 3 to 6 years. So it's not a short time frame that he's got. Saurabh, is this the best company in the auto anc space or auto ancillary space to deploy 2 lakh rupees in?
I think EV is the buzzword in the automobile industry, and the company does a good amount of business in the EV segment and gradually expanding it. So I think the recent numbers were good, but overall this year was not good for the automobile OEM players, and that is why we saw a good amount of selling in the auto ancillary also. But as he says, he wants to invest for the long-term period. I think it makes sense to deploy money in Sona BLW.
Got it. All right. Sudhakar is calling us for a question on BSE, I believe. Sudhakar, you're calling us from Hyderabad. Thanks so much for calling. How can we help you today?
I'm calling from Hyderabad, sir.
Yes, please go ahead.
Sir, I got BSE.
Okay.
14 shares of BSE at 3758, sir.
Okay, okay.
So I would like to know, I would like to add further more to this.
Okay.
What should be my stop loss?
What should be
addition?
So
I bought it 2,200. I sold a lot of shares.
Okay.
6,000.
Okay, can you give me a sense?
Still retaining 14 shares actually.
Okay, you only have 14 shares. So can you give me a sense of what you were thinking? When did you buy these shares? When did you sell them? It's all over the course of 1.5 years?
No, sir, it's only hardly 6 to 7 months.
6 to 7 months. So you made quite a bit of money over the course of 6 to 7 months already, and you're wondering whether to sell all of this, or should you buy more at this point?
I don't want to sell, sir. I want to add more.
You want to add more, okay. And what is the time frame that you have in mind, Sudhakar?
I'm a long-term investor, sir, usually.
Okay. So then, can you help me as to why you decided to sell midway through? Of course, the lure of booking some profits must have been there, but what were you thinking when you booked profit?
I did require some money actually.
Okay.
So I sold some of them. I made a good profit, and then again I have bought also at 3,900 against you.
Okay. Okay. Right. I got it. So good. You've had a positive experience with BSE. The question is, does that continue, and should you add more at this point? I got your question. So on the technicals, Ajit, would you buy more at this point? BSE is making a considerable profit right now.
Yeah, Alex, so it's been a phenomenal run for almost all the platform players, and BSE after this recent surge, now you started seeing a bit of a profit taking or slowdown, in the price action. And probably once we break this 5,000 mark, this profit taking may extend. The stock might retrace towards 4,500 mark. So if you wish to add more, definitely around 4,500, you can start accumulating, but not the current levels.
That is the view on BSE. Next question is from Sarath, and he wants to, he's bought about 100 shares of Roto pumps, and this is at a price of 305. If you pull up the stock price of this one, it's currently trading in the range of 315 or so. Wants to understand the outlook on this in terms of long-term picture. Saurabh, I'll come back to you on this one. What is your view on something like Roto pumps?
Not able to comment on this.
Okay, if you can give us an industry perspective on how the water industry is. There's a lot of emphasis on players like Enviro, Infra and others in this space.
See, the space is quite interesting and a lot of activity is being done. So in that sense, I think from the long-term perspective, it makes sense to hold.
Okay.
Okay. Any chance you have a view, Ajit, on the charts for Roto pumps? It's got a time. I mean, it's got a pretty. I think it was listed in 2022. So fair amount of data should be available.
Yeah, Alex. So after the initial subdued performance, stock witnessed sharp gains. During the last calendar year, and after making a new high, it's almost like 4 or 5 months of consolidation wherein the stock retraced to its long-term averages again. And again, we are seeing some buying interest emerging at the lower end. So overall, it looks interesting, means the price action volume indicates there's a possibility of further surge, and the stock might retrace its record highs in the near future. So definitely one should stay put with the 280 being the closing stop for this position, and 370, 380 the record high zone as a target zone.
Okay. We've got Abhirami who's calling us from Chennai. Abhirami, if I remember correctly, you've called us before. Thanks so much for calling again. How can we help you today?
Good morning, sir.
Good morning. Please go ahead.
Sir, I buy CG Power for 763 my LTP.
Okay.
For 20 shares. Now I hold for long term or bus sold this time. Kindly give me the suggestion, sir, please.
Okay, got it. Abhirami, what is your definition of long term?
Sir?
How long is long term in your opinion?
Sir, because the CG Power sector is going to next year we will go the peak for any ideas. That's only I take this.
I got it. I understood. But when you say long term, will you hold for 2 years, 3 years, 5 years? Is that what you're thinking?
Sir, 2 years, 2 years, sir, 2 years.
2 years,
yeah.
Understood. Saurabh, on the fundamentals then, a perspective for 2 years, bought at levels of 753, losing a little bit of ground. Would you hold on?
I think on the valuation perspective, it looks quite expensive to me, quoting at 9 times to book value and about 50-60 times PE. If you look at the operational numbers also, there was a degrowth in the profitability and the revenue in the September quarter. So in my opinion, I think because the valuations, the stock is too pricey, it may correct more, and acquisition price is on the higher side. So in my sense, I think it is better to get rid of.
Okay, so that's the view for CG Power. Next, we have a query. This is from Ray from Bangalore. He's bought about 40 shares of Persistent System, and this he bought 4 weeks back at a price of 6,110. Currently sitting at a profit of around 9,000 rupees. He wants to understand whether he should continue to buy this or sell at this point. So want to get a 6-month perspective. Ajit, I'll come to you on this one. A lot of IT names in focus. What is your view on Persistent System in focus? Yeah.
So yeah, within the mid-cap IT names, Persistent has been among the top performing name, and the stock in fact recently beat a new high as well. But now we start seeing a bit of a profit taking in the high end. Since its time horizon is 6 months and the earnings season is also about to kickstart with TCS numbers, so there could be a bit of a volatility. So the ideal approach is to at least book partial profit around the current levels and maintain a trading stop loss at 6,100 mark for this remaining position.
Got it. All right. Vinod is calling us from Bengaluru. Vinod, good morning to you. And I believe you've got a question on IRFC.
Yeah.
Yeah, please go ahead.
So I'm holding 1,800 shares in IRFC.
Okay.
And I would want to know, my goal is to keep this share for almost like, it's a long-term goal in terms of like 5 to 6 years.
Okay.
I just want to know if I can buy a couple more shares or not is what my question, because my buying rate was 191 and currently it is trading at around 149 or 150 somewhere.
Yeah.
So I just want to get some guidance on that one.
Okay. Vinod, help me understand this. So you bought obviously for the long-term prospects, and you've read about, I'm guessing you've read about the lending space in the renewable energy space. But did you acquire all of these 1,800 shares at once, or did you buy it over a period of time?
No, at once.
At once.
So back in some 4 to 5 months, I'm not sure with the time frame. Yeah, probably around 4 months.
4 months. And also help me understand, this is part of an overarching portfolio, a bigger portfolio?
Can you repeat that?
Vinod, is this one stock that you hold in 10, 15, 20 stocks, or is this most of your holdings are in IRFC?
Yeah, most of my this one is in IRFC only. Yeah.
Okay, fine. All right. Saurabh, on the fundamentals, couple of questions go to you then. Should he buy more at this point? He's mentioned, he's got 5-year time horizon, so he's not in a hurry to sell the stock. What are the prospects? And would you advise that when you have a large number of shares that you have to acquire, that it's a better idea to stagger your purchase?
It is always better to stagger your purchase, and should you, as you always say, that you should not have more than 10% exposure in single stock of your total investment in the equities, especially in the direct market. So coming down to the IRFC, while the space is quite good, I think the lending activity was lower if you look at the data statistics coming from the banking sector per se also, largely because of lower expenditure by the government and lower capex by the private sector. But I think going next year, things will surely improve, and so the things will also improve for the IRFC, because now they are getting into the newer domains also. Looking at the valuation, I think valuations have subsided now. It trades close to 3 times to book value. Earlier, it was quoting at 5 times or to 6 times book value. Now, it is at the point where it is not advisable to sell, nor it is now advisable to add more even. So I think it makes only sense to hold for the long term. Surely, expectation is that the next year things will improve, and so the stock price, So it makes sense to hold.
Okay, so a hold is what we are looking in terms of IRFC. But moving on to the next query, this is from Priyanshu from Delhi. He wants to understand what is the ideal price of entry for Adani ports, and this is for the next 1 to 2 years perspective. Ajit, I'll come to you on this one. Adani ports last 1 year, we've seen a flattish sort of a stock performance. What is your view? Is this the current time? Is the correct time to enter into the stock?
Since your view is for 1 year or more, I would rather recommend you to start accumulating from the current area and add more around 1020. So roughly around 1170 is something that we are currently trading in. So you can add, let's say, 25-30% in the current area, and then in a staggered manner, 25% on every 3-4% kind of a cut till 1000 levels. So that's the ideal zone basically, where we have multiple supports, 960,000 area, where last time also we saw that the stock witnessed a sharp recovery. So accordingly, one should plan their investments.
Got it. All right. I do want to point out the standard disclaimer, of course. This is NDTV Profit, part of the NDTV Group, which is owned by the Adani Group, and we just spoke about Adani Ports. We got Anuj on the phone line calling us from New Delhi, and he's asking about Infosys. Anuj, good morning. What do you want to know about Infosys?
Hi, morning. I'm holding 28 of Infosys with the average price of 1600.
Got it.
So, two things. Basically, is it planning to reach 2000 or not? It's been stuck up at that level for quite some time. And secondly, I plan to add more.
Okay.
Around 25 more. So, is it a right time, or is there any chances of it going down?
Okay. Anuj, help me with the time frame that you have in mind. Would you like to hold long term? 5 years.
Long term, 5 years.
So I think almost anyone will tell you that within that time frame, it will hit the mark that you have in mind. But let me go across to my fundamental expert to give you some better perspective on how he sees the earnings in the third quarter. I think quite a few IT companies have, reacted positively towards the second half of the calendar year. What are the prospects for Infosys going forward, though, Saurabh?
I think the management, quite a few large companies' guidance was on the positive side in the September quarter earnings. Now everybody is looking at what kind of discretionary spending will come up from the mother market, that is US. And after the recent cut, there is a expectation that the things will surely improve in terms of business from the banking and the companies in the US who are expected to boost up expenditure on the IT side of the business, because of which the Indian companies will benefit surely. Now, I think from the 5-year perspective, I think it is a good hold, and 2000 will not be a worry. I think surely the company will surpass even 3000 in 5 years time frame.
Right, all right. And that's not taking into account any corporate action that might come up in that time frame. Do want to point out it's earnings season this week, and we've got the IT companies that kickstart things. You've got TCS this week, and you've got Infosys on the 16th of January. And of course, we'll bring you the numbers hot and straight from the press. So you can tune in for all of the latest numbers and of course the analysis. You'll find all of that right here on NDTV Profit. Let's go to the next one.
Right. With that, let's move to the next query. This is from Vipul Sheth from Ahmedabad. He's holding 150 shares of KSB Limited at a price of 640. So he wants currently sitting at a profit of around 19,000. Wants to understand whether he should continue to hold for more than 1 year or buy more for average. Saurabh, quickly coming to you on this one. What's your view on KSB Limited?
I think it is a very old and good company, and the space is good. So in my opinion, it is a hold.
Okay, it is time, gentlemen, to hit the rapid fire segment, and you know what this means. I will throw as many questions as I possibly can over the course of the next 2 minutes at you. Do keep your answers as short as you possibly can so that we can accommodate more questions. The first one we have is on Ahluwalia contracts, and this is 1,222 is a buy price. Jaya wants to know, can more be added at the current price? Ajit, on the charts, would you say yes?
Sorry, Alex, you have to help me with the symbol.
Okay, no. Any view, Saurabh, on Ahluwalia contracts?
I think it's a hold, not advisable to add.
Okay. Quest Corp is the name of the counter, and this is a 1-year time frame, border levels of 760. Chandrasekharan wants to know, should it be held? Ajit?
So Quest Corp, yes, he can hold with 630 as a stop loss and 750 as a target.
Okay, coming back to you, Yes Bank is the name of the counter. We've got Ram, who's bought at levels of 24.07, can hold for another 6 months. Should he do so? Ajit?
I would recommend to exit and switch to ICICI or SDFC.
Okay, Sir Ravi is calling us from Chennai, asking about Godrej Consumer Products, bought at levels of 1,115, I believe. Would you continue to hold? Saurabh?
That guidance from management, exit.
Okay, PNC Infra, would you suggest a hold on this one? If you bought at levels of 371.9, it's currently trading at 321.9 from a 2-year time frame. Jose wants to know. Saurabh?
Corporate governance issues, sell.
Okay, Oil India, bought at levels of 580. Ravi Chandran wants to know, would you hold or would you sell? Ajit, on the technicals?
He should hold and utilize recovery towards 540 to exit his position.
Okay, another question on Oil India for the long term. Sandeepan wants to know, is it a buy for you, Saurabh, at the current market price?
Not really, it can be a hold.
Okay, Sarath wants to know about Welspun Living at a rate of 176 bought. Would you hold at this juncture or sell? Ajit, on the technicals?
Definitely a hold. 150 strong base, 180 something that he can maintain as a target.
Okay, gentlemen, thank you so much for joining in, for answering all the questions that you did. Absolute pleasure having you on the show. And we're completely out of time on this edition of Ask Profit. It's been an absolute pleasure bringing it to you from Anushi and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
On my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to KYC, Know Your Company as the abbreviation suggests. It's a new show on NDTV Profit, and what we focus on is to try and cut the clutter in this fast-paced world of stock markets. Investors generally are bombarded with information, but what they lack often is deep comprehensive understanding of companies that they invest in. Know Your Company is a show designed to give the regular investor powerful, actionable insights into the fundamentals of single NSE listed companies daily. Now, quickly moving on to the company that we're going to look at today. We're going to look at Popular Vehicles. It's a distributor in the auto segment, and it's an auto retailer which was established in 1984 with Maruti. Headquartered in Kerala, it operates now a dealership with Maruti, Honda, JLR, Tata Motors, commercial vehicles, Ather Energy and Piaggio. Those are all the brands that they currently distribute. They employ over 10,000 people across 430 touch points across India. Now, key segments, let's pull those up as well, try and break that down. First off, new vehicles, 74% of their sales comes from there, 5% from spare parts. Services is the other larger chunk, 15%, and then pre-owned vehicles is 6%. What I would also want to try and break down and understand, and we'll have Puneet joining in just a minute, is how quickly is pre-owned vehicles growing, and can that growth rate kind of sustain? But that's the larger breakup in terms of the current revenue. I'm also going to try and break down, as we always do on each show, the fundamentals, and we at the end of all of that we give you a rating. So let's start off with what our rating parameters are. First off, we look at the income statement before we look at the balance sheet, the cash flow and the return ratios on all the capital that the company continues investing. Shareholding, how that has evolved, along with street cred, what's the kind of return the stock has given. Along with street coverage, are analysts actually looking at the stock in a deep fashion? Is it a well-tracked, well-covered counter? And what do analysts believe is the upside or downside potential? That's street coverage. And last off, on the valuation picture, how does valuation stack up versus peers as well as other players in the similar kind of cohort? And we talk about all of that on this show. Let me first start off with income statement. Well, revenue currently sitting just shy of 6,000 crore. It's got a very strong revenue growth that it has clocked over the last few years. And I'll pull out not only the last year, but I'll also try and cull out from the last, say, 2021, when the top line was maybe just about 3,000 crore. Currently, top line sitting at roughly 5,600 crores, which is just shy of the 6,000 crore mark. So it's been a very healthy revenue growth that we've seen the company clock. EBITDA too has grown at a healthy pace, but what we've seen is it's not grown as quickly. So EBITDA has shrunk from 5%, EBITDA has shrunk to around 4% odd. And we'll try and add color to that, because is it just growth that they're focusing on currently, and which is why it shrunk? We'll try and get some more understanding on that. But profit after tax up 32%. So strong growth where PAT is concerned. PAT has gone in FY22 to sub 50 crore to now nearly 100 crore, nearly in FY24 on a consolidated basis. So that's how it's lining up in terms of numbers. But Puneet, let me first off welcome. Always good having you. Trying to understand from you, Puneet, how do the balance sheet metrics line up?
Well, definitely, there are a couple of data points when you look at the net debt to equity, especially. It's trading at around the 0.6 times for net debt to equity specifically. And what's important is that, while the cash reserves have been maintained around 40 to 45 crores, the aspect that the gross debt is over 500 crores for a company like Popular. Now, the size of the balance sheet as well as, that's not too much, but this is not a key concern specifically because, it's an auto dealership. So it has to maintain roughly 30 to 50 days of inventory of cars in its warehouses. For that, of course, it needs this kind of working capital, which is generally, financed with the kind of debt that they've taken on a gross basis. But they do also maintain a decent cash balance of about 46 odd crores, which is roughly about, 40 to 50% of their annual profit as well. So they have been maintaining that and increasing that steadily over the last 3 years as well. That's something that's something very positive for this company as well. But, one of the other aspects, Harsh, is of course to also look at the cash flow of a business like this because, heavy cash investment needed to maintain that kind of inventory also has certain strains on the cash flow as well.
Yeah, and that's reflective, Puneet, of the balance sheet that, we'll pull up very, very quickly. The cash flow per se, 80 crore is the cash flow from operations. But let's also break this down because you have receivables which have doubled over the last year or so. From sub 40 crore, it's gone to 71 crore. And you have inventory, which has gone up 5x from around 35 odd crore to 150 plus crore. Those are the two metrics, in my view, which is impacting overall cash flow. In terms of the compounding, therefore, you're seeing a negative 6% on cash flow from operations. And that's where the likely negativity is starting to creep through. Can that change in a big fashion? Well, you would hope so. And if that does happen, of course, you may start seeing a tweak with regard to how one views cash flows as well within the company. But for now, you're seeing a negative 6% over the last 3 years in terms of cash flow from operations, largely led by these two, which are dragging numbers. Net cash flow has, though, been quite healthy in that sense. So somewhere there's been a balance, Puneet. And therefore, overall, we'll want that cash flow from operations to start to pick up. And therefore, that thumbs down view at the moment with regard to cash flow.
And another, I think one of the key metrics is, of course, the return ratios as well, which we do look at as well.
Yeah.
Now, the ROE is, of course, 11.6%, and the reason why it's actually fallen by 7 percentage points compared to last year, but that's largely because of the IPO proceeds that they got in 2024. So that's one of the key things because they had increased that ROE to roughly about the 18% in FY23. The company has also spoken about this in the previous conference call that it is expected to rise again in the next year once this excess cash is deployed. The other aspect is the ROAS, or the return on capital employed as well. That's very healthy at around 17.7 to 18 percentage points. And over the last 3 to 4 years, the company has been steadily increasing this and maintaining at least the 17% levels continuously over the last 4 years, despite the pandemic as well. So that's one of the key things that they've been able to, deploy cash very effectively, Harsh, and that's reflected in these numbers as well.
Well, yes, so cash deployment in that sense is effective and return ratios therefore looking positive. We'd like to look at a turnaround both in inventory as well as with regard to receivables. So those are two metrics we'll track. But moving quickly on, you have shareholding, which is a key metric here because what's happened over the last year or so, they've listed themselves, they've gone through an IPO process, they've listed themselves on exchanges, and 61% promoter ownership is what the shareholding stood at the start of immediately post listing on exchanges, and that's carried on over the last 2 to 3 quarters, which is obviously a positive of some sort, and it's definitely a thumbs up on that metric because what you would expect is some amount of dilution post listing, but that's clearly not happened at all. So management remains very well invested in the company. 61% is a good shareholding as well. It's a healthy shareholding, more than 50%. Not only do they maintain control, it also signifies that they have confidence in the company. So both of those metrics definitely a thumbs up on that count. One was return ratios, which Puneet covered, and one is the shareholding, which I covered. But let's talk about street cred, because returns not as healthy, right, Puneet?
Yeah, and it's been dragged because of the market conditions as well, because this year we have seen a very slow movement of cars specifically, which is majority of the revenues for a company like Popular, and that's one of the key things, that they have reported lower growth in Q2 as well as Q1 as well. Apart from that, what's interesting is that, which Harsh pointed out, the promoters, it's split equally between the three promoters, with Naveen Philip, who's the current MD as well, holding roughly about 20.39%, along with Mr. Francis Paul as well as John Paul, who hold the same stake. So it's been consistent. And the key aspect about the share price performance is, of course, reflected in its peer Landmark as well, which we'll get to eventually. The aspect that, the company is expecting better performance in the next year, both in terms of cars as well as commercial vehicles, because infrastructure spending has increased in this half, starting somewhere in the previous month of November as well as December. That was also absent in the first 6 months, largely because of elections as well as the monsoon. So both the companies, the passenger car segment was dragged down because of the very stupendous growth over the last 2 to 3 years. But the truck segment also wasn't working specifically because, the industry as a whole had come to a standstill in the first 6 months as well. So that's largely down the, dragged down the share price performance in this particular year. But of course, when we eventually get to valuation, that will be one of the positives to talk about as well, because it's now somewhere trading at a very interesting point, to say the least.
Yeah, and interesting you bring that up, because whenever you have a company trading at a decent valuation, you'll always have good street coverage coming through. But at the moment, we don't have any street coverage on this one, and therefore we give it a neutral. No street coverage whatsoever. Two drawbacks of that. One is you don't understand perspective. You don't get a perspective of an active analyst tracking a stock all the time. And second is typically when an active analyst tracks it, you will have certain ESG or rather more governance parameters looked at in a more deeper fashion, which also we don't get, and therefore we'll hold on to the neutral rating on this one. But Puneet, let me quickly come across to you with regard to valuations. How do those stack up?
Well, it's very interesting for both the companies, because we're also comparing it with the listed peer, which is Landmark Cars as well. So for Popular, of course, it's trading at 13 times current price to earnings, since it does not have any kind of analyst coverage. We haven't taken forward PE of FY26 or 27. What's interesting with Landmark is the share price correction hasn't been as steep as something like a Popular vehicle. So when you look at price to earnings specifically, while the earnings have deteriorated for something like a Landmark, the price has stayed stagnant, and that's why we see the big disparity between both these price to earnings ratio for these companies. In terms of Popular vehicles, the numerator, the price has corrected while the earnings have corrected as well, and that's why you can see that the 13 times current price to earnings looks decent, and the disparity is there. But over the next year, when performance increases for both these companies in terms of better market conditions, as well as the passenger car segment also showing some growth compared to the previous year, because of course FY25 will be a low base in FY26, so that's also going to correct slightly. It is expected that something like a Popular vehicles, where the earnings might increase in the next year, will also have some kind of positive price moment. But currently, Ash, it's very interesting what's happening in both these players, because there's not too much competition, or at least in the listed space, while on the private side there's a lot of competition with razor thin margins, of course. But for something like a Popular vehicles, the price has corrected to a point with respect to its fall in earnings in this particular year, and that's why we see it being, cannot call it undervalued per se, because the earnings have fallen, but definitely when compared to something like a Landmark Cars, it's at that adjacent point as well.
Fair point. Lower growth, but at a cheaper valuation, as is generally the case. You pay more for growth. But let's quickly break down on all that we've discussed in terms of performance parameters. Income statement we spoke about, positive. Balance sheet check was positive. Cash flow was negative because of a couple of one-offs that we spoke about. Return ratios was positive as well. Shareholding positive. Street cred negative because of the returns given post IPO. Street coverage is neutral, and valuation picture is positive, giving us a rating of 5.5. But let's go across to the management, shift focus. Puneet, of course, spoke with the company's MD and promoter, Naveen Philip, and he chatted about the company's growth plans ahead, as well as what can we expect in terms of guidance. Listen into a slice of that conversation.
So we are spread across the entire automobile sector. So we have two-wheeler, three-wheeler, we have passenger cars and commercial vehicles. And then we also have distribution of spare parts and the used vehicles per se. In terms of brands, we are associated with very limited brands per se. So in passenger vehicles, we are associated with Maruti, we are associated with Jaguar Land Rover and Honda. In commercial vehicles with Tata Motors and Bharat Benz. Two-wheelers, EV two-wheelers with Ather and EV three-wheelers with Piaggio. In terms of distribution of spare parts, we have far more brands because it's a much larger in terms of we have both Tata Passenger, Tata Commercial, Maruti, JCB, Ashok Leyland. We are agnostic over there. In terms of a strategy going into the future, and this has been a philosophy from day one, and we have repeated it even during the IPO and post, is in terms of building up our service infrastructure in the passenger car business and in terms of having an overall coverage of all categories of the automobile sector. Here, Maruti being the largest brand for the last 40 years plus, the base for service, that is the number of vehicles at the car park that is already present in the country, is the largest for Maruti. So our expansion in service and the expansion to other states and all that would predominantly be Maruti-led in terms of the passenger vehicles. In terms of luxury vehicles, we are present with Jaguar Land Rover. Here again, we would like to keep growing with Jaguar Land Rover and maybe add one more brand in the luxury vehicle portfolio. We are very concentrated in terms of our brand addition. So we are in terms of very focused with the players that we are already there with in terms of OEM and we believe that is our strength in terms of long-standing relationship with the OEMs and having a much larger area coverage and in terms of depth. In commercial vehicles, we have been with Tata Motors for the last 27, 28 years. We are already present in 2 states. We would like to keep expanding with them. Similarly with Bharat Benz since its inception. So overall strategy is that in terms of continuing to be with the brands that we have and growing with them per se, instead of just adding brands on that. In terms of two-wheelers, we have added, we've got into that space only about 2 years ago with Ather. Continue to be happy with the Ather, and Ather is also going for an IPO. And again here, would like to expand with Ather into other states also. And that's our philosophy per se. Three-wheeler as a market, we've seen some troubles in terms of because of the FAME subsidy and all that. So we are still evaluating whether we want to be in that space.
The second question, Mr. Philip, I just wanted to continue the point because the reason I asked for brand addition is because, according to your RHP also, there are either auto dealerships with a single brand across states or, multi-brands as your, only listed player has roughly 10 brands currently operating. You're somewhere, positioned in the middle. So I just wanted to ask, because this year has seen slowdown across the passenger cars as well as the truck segment as well. And it's visible because of market conditions. So, and while you mentioned that your two-wheeler business is only